Hey guys, I trust you are all well. We've got some very interesting things happening in the market today. A lot of news that's coming up our way. And if you ever look at your calendar, whatever you use, I'm not sure that it's productive to be trying to trade today. I'm wearing my glasses and I think the sun is making me look, I'm wearing sunglasses. I'm not. So I'll take them off, guys, just for the sake, but I'm sure I can see clearly. So it's not worthwhile, at least to trade today on the 5-minute time frame, just because of all the forces that are in the market. Now, what I thought I would do is share with you part of the processes that I go through every single month, just to hone my insights into the market, really sharpen how I trade, how I pick up my strategies. So I call this fractal analysis. Now, why fractal? The markets are fractal, which means whatever patterns you see on any time frame, they will repeat themselves on other time frames. So if I was just to show you this chart and not tell you that it's the daily chart, you wouldn't tell whether it was daily, monthly, 5-hourly, etc. So patterns do repeat themselves. So I call it fractal analysis, but I really zoom out and trying to get to the highest time frame that will give me as much information as possible. It is a lot of work. I've been at it now for 3 days. So I do that, at the beginning of every month. I look at all the markets that I'm trading. I've got a few more to go. And I go through and I write notes on my charts, as you can see. And I'll take you through what I've got. Let's use the euro versus dollar as an example. And once I've got that, I then use that to inform me in my review of the past month. Did I take all the trades I should have taken based on my strategy? If not, why not? What did I miss? What could I have done? What other insights am I getting from the markets? Because when I come into the market, as I say, I'm not coming to trade. I don't want to make 1% or 2%. I want to just extract all the wealth that is due to me. And the only way I can do that is to become really, really good at the expert level. And that comes by just looking at the charts and writing things on them. Now, many years ago, I used to print out the charts, and everything that you see written here, I would write on my physical charts, on my printed out charts. And whenever I jumped onto a plane at that stage, I was in full-time employment, I would carry this file with me. And I remember some of my colleagues saying, "What are you doing?" As soon as I sit on the plane, I pull out the chart and I start flipping through and just trying to get these patterns into my neurology. I mean, these 100 billion neurons that are in my central nervous system, my brain and spine, they've got to organize themselves around what I'm seeing on the charts. And that's the whole purpose of it. But as time has progressed, because I've done it over hundreds, thousands of charts, it's easy for me just to do it without as much detail, but detailed enough for me to interpret what's happening. So what I'm looking for when I'm looking at the daily chart, remember, I have mentioned it before, I'm trying to find trades as early as possible as they set up on the daily that can lead to a 2 to 3 day trend. And if I can identify those trades and get into those trades, even though I rarely carry my trades over off the 5-minute, but I can bank a lot of profits day by day and just follow the trade through. So that's what I'm trying to find. And the reason I do so much work is I want to ensure that I really, really get as high as possible with my probabilities. So 2 broad strategies that I trade: trend reversals. And trend reversals, as I've said before, have a higher profit take. You can extract a lot more wealth out of trend reversals if you jump in early enough. But the probability of success is only 40%, which means I need to manage my trades because they'll go against me, but it doesn't mean I'll get stopped out because I can manage them. The other bucket of trades is trend trades. And trend trades have a higher probability of success. I never tell myself 100% success. I kind of look at 60% probability of success. But I know if I put in the work like now, that probability can increase. So the 60% probability of success could get to 70%, if not more. The 40% probability of success on reversals can improve to 50%, which means make a lot more money. You extract a lot more wealth out of the market. Now, what I'm always trying to do is get my 100% certainty that if I'm taking a reversal trade, I know what's going to happen 40% of the times. When taking a trend trade, I know what's going to happen 60% of the times. And that comes from the information I can glean from the daily time frame, okay? And I'm going to use euro dollar as an example. Now, this takes work. I mean, this it's probably taken maybe 2-3 hours to do. There's 2 parts to it. I start from here, then I screenshot, save as picture, copy and paste into PowerPoint, where I can write a lot more things and what the strategies are and what the trades are. And I'll show you that again using the euro versus the dollar. So just before we go in to euro versus the dollar, let me show you what I've done on the other markets. So Hang Seng 50, I absolutely love Hang Seng 50. Done the very same thing. The detail. I mean, this is the end of the month. I can't trade off a chart like this as the days go by, because if I go to the 5 minutes, it's just a mess. So once I'm done with all this beautiful work and it's copied onto my PowerPoint slides, which I'll check with you now, I think for the month of April, yes. So they're probably maybe 300 pages or so. And I got to do that every month. So when I start to trade in May, I start a fresh PowerPoint. I take screenshots for all these strategies, make notes on them, and I go through them. So by the time this week has ended, I will have gone through those plus or minus 300 slides that I have. Now, it doesn't mean I'm just doing that now. I do that at the end of every week. I go through all the slides I've taken. And I'm just honing my skills. That's how you build up to that 10,000 hours of experience you need to have as an expert trader if you're going to extract the wealth you want from the financial markets. There really isn't much point investing the money that we all have to get trained and the hours in, if we're just going to get a couple of percent. We have to pull wealth out of the financial markets. So Hang Seng 50, again, this has been, actually I said 3 days, it hasn't been, it's been 2 days because Monday was a public holiday here and I was glued to Netflix with my wife catching up on series and binge watching. So I don't do work on the holidays, but come 2:30 in the morning, yesterday I start. I still have to go and do gold. I haven't done that. I'll do the same thing. S&P 500, I mean, look at that detail. I've done exactly the same thing. Analyze everything, failed breakout, tight trend range, wedge test of the high of 2022, failed breakout below confluence of support areas. Now I'll show you what I do with that. Top 30, German 30, I have done the same thing. Now, I haven't gone and put the detail of the analysis here because I know what the wage top variations are, but I'll tell you what I do when I get to the PowerPoint slide. UK 100, not complete. I started working on it. But again, having a look at it, asking myself questions. How could I have traded this market based on my strategies? Did I miss opportunities? Did I optimize? If I took the trades, did I manage it the way I want to manage it? If this same pattern reappears the next month, I better take it cleanly, professionally, and extract every single cent, coin that I can out of the market. Bitcoin, I'm going to get to that and work the same thing. Nikkei 225, again, the same detailed analysis. Is it easy to do? It's easy to do because I know the patterns, but it's a lot of work. It's tiring. You gotta stay up. I mean, yesterday into this morning, I stayed up to 1:30 a.m. working on this stuff, okay? Because I know this is how I'm gonna get better and better. And if any of these patterns show themselves up in May, I'm gonna execute them. I'm gonna pull out the wealth from the market. Now, this is price action trading. You know, I remember I got schooled in price action trading by Al Brooks, and he laid a very strong foundation. And I remember when I would sit in his trading room, he would pull out his charts and flip through them, you know, just tons of them. And he said, guys, there is no other way to get good at this. There's no other way to become a pro. You have to create your own charts. I mean, I could package all of these and sell them as a training course, but that's not the point. This is for me to get very good at it. And this is just at the fractal level, at the high level. I think if you're on Sunday TTR, I shared one slide that's more in detail, that's on the 5-minute time frame that shows the detailed strategies. I do the same thing even at that level. Okay. So it's long hours, it's tiring, but it's absolutely fun. It's beautiful when you start to see this, and it's like, man, this thing is so clear. You know, I'm increasing my ability to see into the future, you know, which means improving the probabilities of what is likely to happen by becoming so good at interpreting price action. Okay, so that's the hard work. So I got a few more to do, which I will finish between today and tomorrow. And then I'll go through all my slides again and review all of them in detail. If I have to stay up and sleep a couple of hours, that's fine. The weekend is coming. I can sleep long. I can be nice and fresh. And there's always these periods of time when there is all these multiple red news that are coming your way off the 5-minute. So if another day pops up in 2 weeks' time, when there is red news lining up, then I'm gonna make sure that I don't go away to the shops or whatever. If it's during my trading time, I pull up my charts, I go back and I revise, because you gotta take yourself from a diploma in price action to a bachelor's degree in price action to a master's degree in price action to a doctorate in price action studies. That's what you gotta do. You gotta become a fundi. Everything else is just basics, okay? So euro versus dollar. This is presently where we just crossed over, okay, into that new month. But you can see clearly. So when I clear my my charts, all of this text is going to disappear, okay, by the end of the week. And what is going to remain is structural stuff that is going to influence my trading going forward. So this channel is going to remain. Now, how do you draw a channel? Okay, you need to see 2 points. So a bear channel, for example, from that high to this lower high, as long as I have distinct lower highs, I just use the equidistant channel. I connect the distinct lower highs, extend it. Then I take this extreme of it and just connect it to a distinct low. Okay, so you do that when you see the lower highs, before all of these forms. By the time this forms and you are looking at taking trades here, you are a lot more confident to execute your trades because you know there's a channel line there that's going to act as a magnet to pull the market down. So if we get, for example, a bullish setup here over the next few days or whatever the case may be, the market starts to go up, well, you're going to go long, right? Because you're hoping that the market will get to test that bear trend line. So the market might remain in a channel for the whole year. Who knows? Or for as long as possible. If we break beneath it, maybe a fail breakout and we come back into it. But that would give you a lot more confidence. Now, when I'm doing this fractal analysis, I build up on my chart. So after I screenshot this, you know, when I get to the next month, you know, I don't have to redo the whole thing. I can just add May, what's happened in May, and keep building up. But if you go back and just have a look at the beginning of the year, I'll be saying to myself, okay, did I take the trades that are evident now? Because if I can see them, the patterns will repeat themselves. The price, that's why price action trading is so beautiful, because the patterns repeat themselves on this chart, on the lower time frame chart, on different markets. They may be a lot more complex when they repeat themselves, because then they are nested. There is patterns within patterns, but you learn to recognize it. So with a tight trading range here, and every time we see a trading range of sorts and we see a breakout, we expect there to be a measured move, tight trading range breakout. So the bulls would have wanted to get there, but they failed to get there, and we had a distinct high test candle, distinct reversal. So for me, somewhere within there, there is a trade I would have wanted to take. Because if you take that trade, you then have a reversal into 1, 2, 3 days of bear trading that you could possibly sell into. So if this thing appears again, I'm going to execute the trade. On the other extreme of any range, if the bears break out, they want to get same trading range, measured move, tight trading range breakout. Okay, which we eventually got to. So which would mean that anywhere in here, if I see an opportunity after the bears are breaking out, areas I've marked yellow, I want to try and get into the trade and see if we get to that range. So I would not have traded any of that, you know, whether in the actual day, if I double click on it and I see, oh my goodness, look how easy the 5-minute trade would have been in that portion. I'm not interested. I want to see these inflection points and jump into my trades there. Now, once we get to you know, that tight trading range, and I should have marked this. This is low of 2021, the thick blue line. So once you're up here, you know, that's a big magnet. So we are in 2022. The low of 2021 is a big magnet for the bears, because the bears want to smash through that and create a new low so that they control the market, having broken through the low of last year. But at this point, yes, with a strong breakout by the bears, fantastic. Go to our measured move of that trading range. Then we had a failure. Anytime you see a failure, you got to be thinking, I need to find ways to get into the market for a reversal if it sets up. Remember, reversals, 40% chance of success. But if you get in and you catch it, look what you get. Okay, you're in that day, you're in the next day, you're in the next day, you're in the next day. Okay, if it fails, you manage your trade, or if you get stopped out, fantastic. Because when they do work out, you do make a lot of money. But you still have that high that was created, which at that particular point was a high of 2022, okay, and that measured move. So this bull acceleration is just a bull trend in a trading range, because the market is going to get to test of that high and see if we break out above it. Huge bull candle. At the test, what happened? We get a doji. Now, you've probably heard me say so many times, well, why are we having a doji? If the bulls are so strong, why do we have a doji? Immediately in your mind, you must say, okay, maybe it's just a trading range that's been set up. So the failed test of a high of 2022, it's a double top. There's a tight trading range that's created. Whenever we have a trading range, we expect a breakout, but most breakouts fail. Bears tried to break out, failed. Bulls tried to break out, failed, created a trading range. So there's a level of resistance here, which is very strong, which means the bears are strong. Okay. So then you got to start looking for ways to get into the market. Remember to get in the market there, breakout, pull back, try trading range, but you could be looking to get into the market somewhere within there as well. We still have a double bottom here, which at that point was a low of 2022, very strong magnet. So pull the market down. They failed to break beneath that. That's the bears. So that was a double bottom before we had this candle. Okay, another attempt to break beneath the low of 2021. Failed. That tail means failed, bought by the bulls. And the bulls created an inside candle. Whenever you see an inside candle, you expect a breakout in the direction of the guys who've created the inside candle, which is the bulls in this case. But we didn't get that materialized. The market closed here. And look at what happened. The market closed here. This is a bull candle, which means from this close, the market gapped down all the way down there. So we closed here. Okay, market went up, closed here, gapped down, and the bulls bought all the way. That gives you a lot of information. Okay, we had an inside candle, expecting the bulls to break out, but instead on the very next day, for whatever reason that's taken place in the world, the bears controlled the open and created a gap down. But the bears themselves were not strong enough to accelerate all the way down. In fact, the bulls bought back. So a lot of fighting in terms of trying to get control over this law and come and create a new law. Bears again in the market, again, a failed breakout. Then we get a doji candle trying to get to a new law. So that closes almost, that becomes almost our new law there. If you look at the closes, inside candle, followed by a strong bear breakout. So would you have traded that? You can, if you know what to look for, right at a new low. If you look at the bodies, that's a breakout candle, the bodies breaking out beneath that. So you could look to find ways to get into the market. Okay, how far do you want to go with the market? Well, there's a measured move that you can be looking to go for. That measured move, remember I said whenever you see a trading range and you kind of say, well, where can I put a measured move? The easiest measured move you could put, the low, the high, and that's where the bears would like to get to. Okay, alternatively, you just go and click on your line chart here. You get line chart is based on closes, and the close of any candle is the most important. So you could do that, especially when you're looking at trading ranges or tight trading ranges, and there's no clarity. Just put up the line chart and use that and see where it gives you a measured move. So there is a high based on the closes. There is a low and the measured move of the line chart. So measured move line chart, which is based on closes, is here. Okay, so you would have said, well, if the bears are strong, they want to get to that measured move, which I had. but I've taken that out, so let's put that back for you. Okay, or if the market is turning, there is based on closes, which tends to be the nearest to you. So if you wanted to take profits, again, you get profits, you can use the line chart. Remember, when you're taking profits, you have to go away. Don't aim for the furthest profit. It's fantastic, but the market may turn before that and you come back and it's like, oh man, what happened? You know, I've seen that happen so often. So if you have to be away, look for the earliest profits to bank. Anyway, the market go to that measured move. So we can just take that out, keep our charts a little bit cleaner. And it turned right there. Okay, remember, at that point, we don't have the channel line because the channel line was created between this high and this lower high, and we plug that thing. So at that point, we don't have that. All we have is a failed breakout beneath that measured move. And we know the market the bulls have bought into it. So you've got to try and find ways to get into the market. A reversal trade, okay? If you can find a way to trade from the open, and those are different patterns, and see if you can catch a couple of days of that move. Breakout, most breakouts fail, and the market try to test the breakout point within there. So that is an attempt to test that level. If you're a price action trader, you know most breakouts fail. If you have a strong breakout, you're now looking for a low one, which is a breakout, pullback, test of the EMA, low one. You want to look for ways to get into that market. But if you're looking for these strategies that I call them the wealth extraction strategies. If you're looking for the wealth extraction strategies, you don't want to wait for this trade. This trade now becomes a trend trade, 60% chance that will go your way. That's fantastic. But you want to get the reversal trade as the market tries to test a breakout point, test a 20 EMA, and it turns. We want to try and take a major trend reversal trade within here. So we can maximize that profit and still take the trend trade. Okay, so breakout pullback low one is a classic trade. If you don't take anything else, you gotta take that trade. Hoping to see if we get done. If it fails, well, you get out, break even, whatever the case may be. After a low one, breakout pullback a low one. Okay, after a low one, we get a low two or we get a low three. But we also get a double top here that's created. Now the market tried to go up once, tried to go up twice, and tried to go up 3 times. So a wedge pattern is formed within here. Whenever you see a wedge pattern being formed, wait for the third push. So 1, 2, 3, or 3. And you want to see if there's a reason for you to take a trade. Why would there be a reason for us to consider taking a trade here? Well, because of this huge level of resistance, the low of 2021. It was support through here, we smashed through it, now it's resistance. The market comes to test that. You can wait to take the trade beneath that if you want. Safer, we are now in the trend and it goes your way, fantastic. That's a trade, trend trade, 60% probability it's gonna go your way during the third touch. Or you look for this reversal trade. That's where you gotta extract the wealth from. Okay, because you're anticipating the market to test it. Before all of this forms, that's why it's a 40% probability because you can't see it, but you know it's there. You gotta try and take a trade there. Okay, and then if you do that, you're in that day, the next day, the next day, the next day, then we start to go sideways at the low, which we have no problem with because now we're coming off a wedge pattern, strong bear forces, strong bear breakout from the wedge, market goes sideways, that is a pullback. The same forces in a pullback, so the same bear forces that are acting to create the tight trend range pullback are exactly the same bear forces that have created this first pullback. It's a breakout, it's a pullback, okay? Because we trade on the 5-minute time frame, we can find ways to trade that while we wait to find our reversal trade. In this case, the pullback is in the form of a tight trading range, but in a tight trading range, we are also looking for 3 pushes. Market tries to go up here, micro double top fails, second, third time, so that is a wedge, or 1, 2, 3, that is a nested wedge. Okay, nested wedge, because there's that pattern there, 1 micro double top. Micro, it's a double top, but 1 or 2 candles beneath, between them. Try to go up again, failed. Try to go up the third time. The market is trying to go up 3 times to another high, but it's failing. Okay, we have a breakout attempt within this trading range, and we have a pullback. Again, the market tries to break out but fails. Now you got to be looking, if you trade in these major trend reversals, for your way to get in here, extract the most wealth. If you don't find it, if it's complex, not a problem. You wait for the trend trade. Trend trades 60% probability, and you take all of that. Now, what I want to do, just for the sake of time, I'm going to go take this very same picture and show you how I put it onto the PowerPoint and just the way the opportunities are. Now, my recommendation is that you do this for yourselves. Don't have to do it with all 8 charts for now. At least choose one. Okay, do a fractal analysis. What's happening? What's happened since the beginning of the year on the daily time frame, and see if you can see the opportunity. Say, okay, I could have traded. I should have taken trades here. If you're taking 5-minute trades, because they will repeat themselves, and you want to be ready for them, whether on this market, or any other markets. So keep that picture in your mind, and let's see if I am smart enough to show you on PowerPoint. There you go. Now it's a lot more interesting. The very same chart we're looking at. And guys, as I said, it's a lot of work. It's you get tired, of course, but you got to do it. Our goal is to come into the market and extract wealth. That's why we got to do this. So this is all the stuff that's behind price action trading. Now, for those of you who are going to join me Wednesdays at the market, all the links are on the sales page, and I don't know if Maya has them readily available, but Wednesdays at the market, search for it on the Actions to Wealth page. Wednesdays at the market with George. 8 hours will be together. It's the free sessions are the second Wednesday of every month. So this time next week, which is Wednesday, the 11th of May, 8 hours we are together in the market. A couple of hours during the Asian session open, 3 hours during the US session, 2 hours during the US markets, and whatever I missed. Then end of the day, we do an hour talking about money management, so we can trade, but how do we manage our money so we can extract the most wealth out of the markets? Make it a point to attend the Wednesdays at the market with George and just sit in, create the time. I'll see if I can find it and I will post it for the guys. I'll try and reserve a few minutes for myself. Just post it for you. But Wednesdays at the market live. Now we go through all of this and you can see how I actually put this on live charts. Now we find the trades and execute them across all 8 markets. Now this is exactly what we're looking at. Fractal matrix analysis. Now, what I've put here is 8 2.3D strategy setup. That's reversals into 2 to 3 day strategies I've set up. There are additional trades which I've got there. So that's number 9.1 to 9.4 are the additional trades that I've got. So Brian, I'll get back to you in a sec on the sessions next time. So this is everything we're looking at. Now I've put a lot more detail. You can see this is a note I write to myself. So this wasn't written for this session. That's to me as a reminder. Use wedge top and bottom variations as a filtering gate. Now, what do I mean by that? The reason I put all of this work in, guys, is I've got 8 markets that I'm looking at. During the day, I don't want to be flipping through every chart and just going crazy and trying to find trades, because trust me, you're going to make a mistake. You're going to see a high test candle that looks perfect. You're going to convince yourself it's a way to trade. You're going to trade, you're going to lose money. Or worse still, you're going to make money doing the wrong things. We don't want to do that. So I use wedges as filtering gates. So out of my 8 markets, if I don't see anything that's setting up on the day, that particular market is not on the watch list. I just take it out. I'm so ruthless with it. So out of 8, I might end up with just 3 or 4 that I'm looking at. I have to be so ruthless with myself to make sure, for example, I only want to look at a chart like this. If it's down here or here, I'm not interested. So I narrow down. That's the filtering gates. I narrow down to the ones that I'm going to be looking at. Then once I've done that, I then look, go now into each day at the open of the Asian session. I'm interested to see what happened with the first candle of the day. Does it correlate to what I'm seeing on the fractal market matrix analysis for those 4 charts? If that first candle of the day correlates, so if I'm looking at this and I'm trying to find a way to get into the market at this level, okay? So what I'm looking for, MTRA, it's a major trend reversal alert after the bull high test of a hidden resistance level until the bull inside in the middle of the trading range. Okay, so what I'm looking for here at number 1, I'm looking for a major trend reversal alert. So I haven't seen this particular candle, but I've seen breakout. I've seen a high test, okay, which is a reversal at hidden resistance level, okay? And that eventually becomes high of 2022, and the hidden resistance level is this measured move tight trading range breakout we spoke about. So I'm here with this candle. I'm now going into my 5-minute time frame to see if I can find right from the beginning an attempt from that first candle to break out above this and a reversal, because at that point, that's now the high of 2022. If I see a reversal, that's MTRA, major trend reversal alert after this, then I'm going to take that trade. And if I get into that trade as a bear, if I'm going to stay as a bear as long as possible, the next day I'll be a bear, doji. If you manage it well, make money or break even, whatever the case may be. But I'm carrying on until I get to the middle of the trading range, then the market goes sideways. There's nothing else for me to do. So I got to jump into that particular trade. Okay. Then when I get to this level, which we spoke about, it's a failed breakout of the low of 2021. That's the low of 2021. Why is it a failed breakout? Because we had the breakout candle, we had a pause. It's a hidden support level, so it's a reversal at hidden support levels. These are part of the strategy that I look at. If I see a reversal at a hidden support level, my strategy says if I see a micro double bottom, that's a double bottom, either 2 candles next to each other or separated by 1, I gotta jump into the trade. Okay, so at number 2, again, I'm looking at the major trend reversal. Why major trend reversal? Because we are going short. Yeah, we are bearish. But everything is telling me that there is a probability that the market will reverse. Now, I have 100% certainty that I'm in my major trend reversal strategy, which is a 40% probability of success. But if I can get in that 40% here and manage it, and if it goes my way, that's all the profit I'll be taking this day, the next day, the next day, the next day, until we get to that top. Okay. So it's a major trend reversal after a bear doji, that's a bear doji, and after the failed breakout of the low of 2021. All I want to do is just buy all the days, okay, until the bull, doji, and failed test I have 2022. So once I'm in there, I'm just going to be looking for ways to get to the market. Okay, if I trade that, get out of the trade, I come back the next day, I look at the open, I see bearish price action. I am super happy because I look for my major trend reversal strategy. That little pattern will reverse at some point. It will be a test of the 50% of yesterday. Then I want to get into the market. The next day, this was a trend from the open, bull trend from the open, one of our strategy at the open. You want to jump into that. The next day, when the market opens, there's a huge bear reversal. This could have been in the Asian session, or it could have carried on into the European session. It's fine. I'm waiting for a major trend reversal. I'm going long, okay, based on what I've seen here until I get up here. And if you catch that reversal trade here, I mean, remember, you know, our stops in the 5-minute while they're technical level are absolutely minuscule compared to daily patterns. And that becomes a profit. If it's a difficult day to trade, you just hold it. If it's an easy day with decent trends, breakout pullbacks, you keep building into the trade. And then we get up to the top here. Look at the wedge pattern that is formed here. That high, market went up once, came back, market went up again, tried to go up again, third time. So that is a wedge attempt, which is an additional evidence of bear forces between the tight trading range, and you can look at going long. Now, it's quite complex. It would take us a long time to go through it. And hey, if we find time, we'll do that. So what I just want to do very quickly is just, okay, so get back to the chart. So Brian, I'm going to answer your question about when next Wednesday. So it's second Wednesday of the month. And our very first session will be Singapore time, 9:15 to 11:15. Okay, I'm going to just post. Beautiful. There is the link. Putting the link in the chat box. So that's to register for the first session. Okay, so sync time, it's 9:15. Okay, so I'm giving you Singapore sync time, 9:15 a.m. to 11:15. And then that's then followed by a 3-hour session, which is the European session, which is 14:15 p.m. Hang on, what did I not see it yet? Who can see your messages? I think you should be able to see it. Can I change my setting to 11? Oh, goodness me. All right, apologies, guys. All right, I'm just gonna. All right, that was my mistake. So just to avoid, I'm gonna repost the sessions just now. Okay, hopefully you can see that first one. And And the next one is London Open. So you can just join these. It's kind of a one-time session, the second Wednesday of every month, absolutely free. It's a trading room. So put up the charts, we start to work. You can post your questions in the trading room, and I can answer them as and when I get free. Sometimes it gets very busy. And I could be quiet just watching things. But if you are watching, what I'll do is I'll explain to you what we are watching and what has been filtered out following this particular reasoning. So my suggestion, guys, here's what I suggest for everyone. Have a look, revisit today's particular show. Just work through the thing that I've been sharing with you and absolutely utilize that for your benefit. Otherwise, I will see you next Wednesday, the second Wednesday of the month. We have the 8 hours that are in the chat group. Plus, we also have our 45 minutes live trading show. So I think there's a 15-minute break, we have some coffee, and we come back. So really, Wednesdays are beautiful days for us to spend time together in the market. I will catch up with you guys. Thank you, Mai. Thank you for hosting. See you guys next Wednesday.